All right. Good afternoon, everyone. Hope everyone's having a great day. I just flew in yesterday for this event all the way from Dubai, so it's great to be here. Yeah, I've known the Hacken team for a long time in Dubai, but it's great to be in New York. Looks like everything's happening here in the States. With the new administration, we've been very busy ourselves and recently opened office here, so it's great to be here. My name is Nikita Sachdev. I'm the CEO and founder of Luna PR, as Igor just introduced me. We're a PR agency focused on digital assets, Web3, blockchain, cybersecurity, you name it. We've been around since 2017. I started my crypto career in Singapore with Huobi Exchange, now HTX, and been in the space a long time. I'm very excited to moderate this panel. Regulation is always an area that people don't love talking about, but is the backbone of this industry. So excited to moderate this panel, and I'd love for the panelists to introduce themselves.
Hey, good morning. Thanks for the Hacken team for the invite. I'm Juan Reyes. I'm the National Regulator of the Digital Assets Commission for El Salvador. Literally, we're pretty much the OG in the industry. We've been regulating now for 3 years, and in our industry, that's a long time. So we now have over $250 billion assets under supervision, including the largest stablecoin company. I mean, it was very interesting to hear the previous conversation and all the conversations. Great event, by the way. So I'm looking forward to sharing a couple opinions on compliance and regulation.
Hi, everyone. I'm Jamie Udinson. I am the head of our crypto asset investigations team at FINRA. And if you don't know what FINRA is, we're the self-regulatory organization that oversees the United States securities markets and broker-dealers. And for about 3 years, I've been building out our first dedicated crypto team, been a principal member of our crypto hub, as we have been setting strategy to become crypto capable. So thanks so much for having me here today.
Hello, everyone. My name is Yaros. Kind of have a little bit of a weird background. My background's a mix of finance, technology, national security. Started my career at Morgan Stanley working in private wealth management, started building out trading algorithms later in my time there with my computer science background. Eventually moved over to the Government Accountability Office where I did cybersecurity audits, pretty much cybersecurity threats to financial institutions, before moving to the Treasury's Office of Terrorism Financial Intelligence, where I led the terrorism and nuclear proliferation team there. So dealt with all the bad actors, North Korea, Iran, Syria, every global terrorist group in that role. So doing it from an illicit finance perspective in that capacity. Eventually went to the Senate Homeland Security Committee, so started working kind of cybersecurity from the policy side in Senate there, before eventually taking over this role in Idaho, where I was appointed by the governor to handle the Securities Bureau. So we handle all money transmission, escrow, securities, and commodities.
Keeping us safe.
That's what they say.
My name is Christopher Klaich. I am a senior policy director at the Digital Chamber. We are the first and largest blockchain industry trade association. I lead much of our national security policy, but also our state-focused policy and some of our global developments work. Previous to my time at the Chamber, I worked in a bunch of different consulting roles, national security related, international development here in the States, but also a handful of places overseas. So I've had my hand and kind of experience in the national security world for a long time as well. Great to be here.
Amazing. Fantastic panelists, and they've all been in this space for a very long time. I'm sure you guys have been through the ups and downs of the digital asset Web3 markets. And with that, we've seen a lot of security breaches, a lot of cybersecurity attacks that have even catalyzed the bear markets in our industries before. What do companies and regulators need to do to ensure that these cyber attacks don't turn into systemic risks or even financial crises overall?
Well, I'm happy to jump in from the regulator point of view. The bottom line is I've run cybersecurity at NASA, which is handles all the state securities regulators in Canada. And really, a lot of people who are brought up in our areas, they have financial backgrounds. They don't traditionally have cybersecurity backgrounds. So really, it's a challenge for them to kind of learn this new world as a whole. And that's something that you need to have a little bit of patience with. One thing I will say with the regulators overall is that they should have a desire to learn this area, because this is the way finance is going. Bottom line is, it's becoming more digital. You need to understand what's happening in these spaces. But as you kind of move along within there, understanding the interconnectivity between programmable assets and transactions is really a key thing. But it requires a few key points, right? First off, we need some level of accountability. That's what regulators need. They need somebody to hold accountable. And when it comes to cybersecurity, we want to know somebody's in control, somebody's behind the wheel, whether that is hiring a CISO, whether that is, DAO creators, whether that is foundation heads. We need to know who to communicate with so that we can kind of build out that collaborative partnership as things go bad, so that we can make solutions happen. We also need transparency and auditability at some level. And we talked about it. Yeah, blockchain is great for that, but we also know that there's a whole off-chain world that we have to pay attention to as well that needs to be secured. So really, we need industry to understand their architecture, right? You need to understand where hidden third-party dependencies are, what smart contracts you're dealing with, what bridges you're dealing with, which we know are traditional areas where people are getting hit. And then we need you to, find those areas where we have concentrated risk. And where we have that concentrated risk, show us that you're trying to put in countermeasures. Show us that you know where these risks are and you're trying to address them. We need to work together on that in a big way. And I think that those are, some key things on top of us needing to get tools, because a lot of regulators don't have tools. I had to fight to get Chainalysis inside our state. I mean, that's the bare bones, right, of what you need for a tool to monitor. And I had to find a back door to do it. And it may be gone next year. I mean, that's a problem for us in a big way as we move along. And we want to see incident response plans. I mean, tell me you know your architecture by showing me, if something goes wrong, exactly what you're looking to do.
I think I'd add a couple of things from the industry perspective. We're all here focused on the same topic. Cybersecurity is financial security. Cybersecurity is national security, increasingly so. It has been before, but as the industry and digital assets expand in market value and usage, that becomes increasingly true. From an industry perspective, the public-private partnerships, the organizations that have already been established, IVAN, the Crypto ISAC, just recently over the last 3 or 4 months, I think the Beacon Network, really important, essential partnerships to share information, to identify bad actors or activity in real time and be able to freeze funds or stop them at the exchanges. I know we have exchanges here that are part of some of those networks. Those are extremely important, and I think there's no way that regulators can do, have all the burden be on them to put regulations out there. It has to be a partnership with the speed of the activity that takes place on chain. So those are some really interesting organizations that have good traction now. They're building and growing in how they operate. And hopefully they will continue to expand the network of organizations that take part in them. And one in particular, the Beacon Network, includes not just industry players like some of the biggest exchanges in the world and regulators and law enforcement, but it also includes some DeFi applications, which is really interesting, the bridges, so that they have people, like John said, that they can reach out to and real time and say, hey, this transaction or this address is they're bad guys. We need to halt that or seize the funds. So expanding those networks, I think, is extremely important.
I just want to echo a few of the sentiments that you just heard, because I would agree with them. Cooperation is a really big need. We've had an uptick in cooperation, public and private, but also we've seen cooperation across the industry, I think, increase in the last few years, as the private sector, I think, is seeing that there's real value in sharing information, maybe over and above what you're used to sharing. So I think that cooperation is key, really using sort of the the approach that, if there's a threat, if there's information that can help identify a threat actor, that can be shared across the industry. We have these great tools now that are available in order to do that. And this trust that, regulators and law enforcement being brought into a process is actually, for the benefit of the whole industry, as opposed to just, throw the book at you after the fact. So I think we're really developing what that, cooperation can look like so that it's beneficial to everybody in the future. And just another sentiment to echo here, which is, education is not to be underestimated here as a need. Internally at FINRA, we have people with decades of industry experience in TradFi, and we're throwing all these terms at them that they're not accustomed to. It's technology that they don't understand. And one of the challenges so far has come from, I think our innate sort of impulse to do a one-to-one comparison. Something we understand in TradFi, we try to assign it to something, in the DeFi ecosystem, for example. And that's not really what we need to do here. It's sort of like getting people to understand that a lot of this is new. And when people say, hey, we need clarity from a regulatory standpoint, we need to understand what the rules are going to be, or what the processes or the audit practices are going to be are going to look like. That it's not just go to your book and pick a few things out and go to your your procedures and pull a couple of methods out. That we really have to listen to the industry and understand where we were falling short if we tried to do that, and what the best process is going forward. We're trying to do that within FINRA. We have a lot of cooperation with the industry. We have a working group. We're trying to understand what the challenges are that firms, broker-dealers that are in the space are facing, and how they are navigating those issues, not so that we can say, oh, you're doing this wrong. Quite frankly, we don't have a rule to point them to and say, well, you didn't interpret that correctly, because a lot of it's still in progress. And so we're really just trying to understand what the industry is doing so that we can help, pull everyone together so they can better communicate what best practices are, and then we can sort of push those out, to the rest of the sector.
I'll share with you guys the Salvadorian experience, and there's a couple of things here, a couple of lessons to be learned globally. We adopted Bitcoin in 2021. Perhaps, in my opinion, the greatest lesson of adopting Bitcoin as a financial instrument is the understanding what Bitcoin really is. And what I mean, and after a year of regulating, working globally, not seeing any other country doing the same thing that we're doing, I came up with an analogy that will help explain what the difference is. To us, an electric car is just a car. You have a key, it's got 4 wheels, point A to point B. You just plug it in instead of getting gasoline. But if you bring that electric car to your mechanic, he's gonna have a heart attack. The biggest issue is that an electric car is a computer code running sensors to make it behave like a car. Digital assets is code to make tokens or coins behave like financial instruments, but they're not your traditional financial instruments. And if you don't understand that, that's gotta be the number one concept. And that's what we understood after legalizing Bitcoin as our national currency and trying to supervise and regulate Bitcoin. The central bank had no tools available to be able to do this. The superintendents of the financial system also didn't have tools. So we created a special law, which is the law of digital assets emission. And we staffed it with people. And I came specifically to run this commission. I've been in the industry since 2013. And if you can't tell, I'm a Bitcoiner. And our focus was, how do we, and again, this is very unique to El Salvador because we were a war-torn country for over 30 years. We don't have the financial industry that you guys have. So we were able to apply something that was blank sheet. What's the best case scenario? How do we reduce the risk? Now, this electric car analogy applies to digital assets. I've been in the industry for a long time. I work with some stuff that I still don't understand. when it comes to decentralized financing and other tools, very complex. Personally in El Salvador, I won't touch them. What we did is we created rules for the financial instruments we want to regulate, and we know that we can supervise and regulate. And the ones that are completely wonky and are very hard to trace and regulate, we do not regulate. They're just not welcome in El Salvador. We don't have meme coins. We are focusing on the convergence of digital assets and traditional financial industry. And what does that look like? Real world asset tokenizations. That's what we focus in El Salvador. So our cybersecurity aspect of it, it's being reduced because we don't do crypto. I mean, we regulate exchanges, but we have to understand the need of exchanges and the fact that, I don't know, many of you know what Hyperliquid is. You can go on with an email address or just any wallet, sign up with Hyperliquid and buy whatever you want. And the need to not be so stringent with the exchanges because there are other options that are completely unregulated. How do you work out a balance between being too strict with regulation and at the same time understanding that this industry was created to be peer-to-peer? I mean, the whole point of Bitcoin is how do you transfer value from one person to the other without having to have an intermediary? So that's what we've done in El Salvador. It's worked well, but what we focus in technology. And my team, anyone that's hired by my team, within 6 months, you have to either be enrolled in a postgrad in crypto or at least have a postgrad in crypto to be part of the team. So everyone is highly trained.
So it seems like there's a lot of moving parts to a proper structure. It seems, of course, there's a lot of emphasis from you guys on education, on cooperation, and maybe just simply time itself. Just recently, last month, we saw one of the largest liquidations in the crypto space, $19 billion lost within 24 hours. And it wasn't a hack. It wasn't a protocol failure. It was a systemic. It was just a market, the way the market was designed. And so sometimes it just shows it's not just one thing, it's a whole system as a whole. FTX was another big crisis in the space. And with the collapse of FTX, many pointed fingers at several parties. Who was to blame? Regulators? Was it the user's lack of education? And so accountability is one part, I think, with cybersecurity attacks that we always kind of question who is to blame. So when an attack happens, who should take responsibility?
I would say the answer is everyone, right? It does go down the line. It is obviously the entity or the protocol or whoever's creating it at some level. You need to know what you're doing, why you're doing it, how you're doing it. I mean, there's a lot of responsibility there, and understand how you integrate with the rest of the system. And the bottom line is, in the ecosystem and the programmable kind of space that we have now, everything does move quickly. And, obviously nowadays people's patience isn't very high. Was about 20 seconds before somebody gets bored with something. But at the same time, in this space, we want our payments done quicker in a big way. But you do have to take those risk assessments, make them an important part of what you do. Make sure you know your incident response. Again, know your structure, know what you interact with. And that way we can put in those safeguards that we're talking about, whether that's rate limiting or maximum usage on a smart contract or something along those lines, something like smart contract modularity or things like that. We need to know where we're going to put in these circuit breakers, and that means understanding what we can program in, understanding the ecosystem as a whole, and like I said, from the entity perspective, tell me what, why, how. From the regulator perspective, we need to start understanding. A lot of people wish that this sector would just go away, or that it was a gnat, or that it was a fly. Guess what? It's a $4 trillion market that will continue to go up in some way, shape, or form, I believe. And we need to stop pretending that it won't be there in the future, or just throwing enforcement actions at it. We need to become partners. We need to be collaborative, talking, understanding where things are. And when it comes to the service providers, it's the same thing. It's just like any other part of your supply chain. The entity should know, but also that service provider needs to know what tools and services they're providing, what security controls they have in place, and make sure that they have the redundancy and resiliency in place to enable activity to occur or to stop activity when necessary.
I like to say that the transparency that we have in our industry in digital assets, this liquidation that you spoke of, we're able to see the whales that move the money in and either short the system. And I think within our industry, we've had different eras. Right now, I mean, the last one was the meme coin era, where big disaster. Sadly, I hope I don't see it, but sadly, the next era that's coming is the stable coin era, because everyone and their dog wants to do a stable coin. And as a regulator of the stable coins, it's complicated. You have a lot of companies that are bigger, that are trying to attack you. Their cybersecurity plays a big risk on this. But when it comes to the current liquidation that you speak of, this is another issue that we have with our own industry, which is the amount of leverage that's been playing. Today, if Bitcoin goes up to 117,000, there is billions and billions of dollars that will be liquidated from everyone shorting Bitcoin. Now, when you have holders of Bitcoin or any type of digital assets in general that have large amounts and can move their money and move the price up and down, of course they're going to take advantage of it. And I mean, the beauty is that in our industry, you can see the blockchain transactions and you can see who the players are. You don't know who they are, it's anonymous, but you can see the movements. You can see and speculate who they are, but you don't never know who they are. So I wouldn't put that into a cybersecurity aspect. I would put that more into, we're going to grow out of that eventually. And once we're over $10 trillion, which hopefully by next year, you won't be seeing this market manipulation that we do see today.
But Juan, who's responsible when it comes to market manipulation? Is it the retail investor that should do their own education, or the regulators, or both? I mean, John, you said everyone.
Yeah, I mean, everybody has a role to play in that, no doubt about it.
I think when it comes to market manipulation, if it's a free market, I mean, you can take over a company by buying over the board of directors, stacking the board of directors. That's legal. And you can question that some of the decisions that have been made in traditional fair markets is market manipulation. Eventually, specifically to Bitcoin itself, there are too many coins in the hand of few, and that allows for those big players to be able to pump the price, dump the price. And now that you have a lot of players playing a lot of leverage, you're going to see those liquidations. And eventually, I think that's going to stop when it grows to a certain level. But I think that's just growing pains of the market. That's not really someone's fault.
So I want to go back to the original question and take that FTX analogy. I know, old news, but it was a good lesson to be learned. So when FTX collapsed, they were registered in Singapore. They were not licensed in Singapore. The MAS completely declined any say or had any effort or anything to do with the collapse of FTX. FTX blamed the regulators. Everybody was blaming everybody. And I think one of the issues is that the regulatory frameworks we have vary from jurisdiction to jurisdiction. So do you think that we need one unified set of rules, or is this kind of variation across borders going to work?
Look, with the FTX, okay, so we have an international body called the Financial Action Task Force, the FATF. FATF put out a couple of directives a couple of years ago, which is the registration of virtual assets. Therefore, every country has a registry. Most countries that are compliant have a registry of virtual assets. It's very dangerous. I advise 9 different countries in South America, and it's a challenge to just open a registry and have companies register, such as FTX signing up in Singapore. It's a registry. It's open for everyone. And it's sadly, I mean, we focus in El Salvador. We have the Commission of Digital Assets has no sign-up registry. We have 86% denial rate of all the companies that apply. Sadly, there isn't clear regulations globally on digital assets, and there isn't too many people from the industry that have been able to be part of creating clear regulations for a country. So El Salvador is, we're on the eye of the storm. We get 5 to 10 applications daily. However, the challenge is this. I mean, we're the regulators for El Salvador, protection of the Salvadorian consumer, not the global regulators. A lot of great companies, but we don't have the capacity to be a global regulator. But for us, also, the standards are extremely high. We comply with, CJ mentioned earlier, the travel rule. The travel rule is implemented or mandated by FATF that it has to be implemented by next year. So when you do a nation-to-nation evaluation, and that's what the FATF does, part of your group of nations, they evaluate you and they say, well, look, you're not complying with the travel rule, you're not complying with a registry, you're not complying with this, your country's at risk of getting on a gray list, and that's really bad. So most countries are forced to do something to be part of that. The registry part is part of that. I think it's a great initiative. I think now that's been 3-4 years since, we do have to move forward and create proper regulation that needs to be
Jamie, Chris, I want to give you guys an opportunity to speak. It seems like U.S. has always set the bar for traditional markets. When we do PR, we know that retail investors have a certain type of trust working with American companies. Should the regulation here in the U.S. be the bar for the rest of the regulation in the world?
Yes. Well, obviously, the U.S. leads capital markets, and this administration intends to be the one that puts in place the U.S. as the crypto capital of the world. The G20 leadership is moving to the United States in December this year. We've had a couple of very brief discussions with the White House official who will be leading that effort on behalf of the U.S., and they have stated that there will be a strong focus on security standard setting around crypto assets over the next year. That's part of what they intend, I think, to focus on. So I think the answer is yes. The U.S. obviously is a leader in across the space for many different reasons, and so the network of countries that are coordinating on this are only as strong, really, as the weakest link in a lot of respects. And so it's important to have that coordination and a floor set on the standards that the allied nations operate across.
I'm going to agree with that. All of that, yes. I think what's been true for a very long time is that the quality of the markets, the integrity, all of it is really resting on the fact that we have strong regulation, we have strong disclosure requirements, our audit standards, everything from listing requirements, everything is built to have created the market powerhouse that we enjoy right now. If we have the intention to remain the same kind of powerhouse as the world moves into digital money, then we will absolutely do everything that we can to ensure we are setting the standard. And I think that's one of the reasons why there has been some hesitance to be prescriptive about rule setting is really because we have so much at stake to write rules that are not appreciative of the developing technology, the speed at which it's moving, and that rules that are not taking into account what is actually happening in the private sector. We risk that position in the future. So I think we'll get, when we do get the clarity, when we do get the additional rules or the amended rules, the goal will be to ensure that we are that front and center going forward.
And John, we were talking earlier that Idaho has been pretty quiet when it comes to the Web3 scene.
Yeah.
But yet here you are. And how important
I'm one of
is
those kind of weird things. The governor doesn't really like it. I'm not going to lie about that straight up. They prefer we not talk about this type of stuff. And to me, you have to be. This is our industry. This is something I've been around since 2013. And the bottom line is you don't get to choose where the financial system goes. People will choose that. And your job as a regulator is to enable activity to occur. Say, hey, okay, we see some problems over here. How are we addressing this? Maybe not this. What else can we do about that? But when it comes to the standard setting in a big way, I just want to say that, I think we can raise the floor. That's an important thing, definitely on the cybersecurity side. We can raise the floor, but at the end of the day, there is no one-size-fits-all solution for cybersecurity. So making sure we're not too prescriptive is a really important thing. And as we talk about everything in this space as a whole, one thing that I created inside Idaho that Chris knows about is our Financial Innovation Lab. More regulators need to create structures that enable that public-private partnership to happen, put out thought leadership, This is blue sky thinking. We need to do that. We can't be scared of that. And putting that out there and saying, hey, okay, we got 80% of it right. Okay, how do we move that next 20%? But we need to be moving forward. And that's why I created my Financial Innovation Lab, my Emerging Technology Advisory Committee, to do this stuff and also to push our political powers. Because sometimes people look at the regulator. Guess what? It's usually a political appointee in charge of that. So you know what? There's a lot of political will that needs to be pushed as well. And that's something that people don't look at nearly enough.
I think we can talk about this topic for ages. It's a very dynamic set of panelists, but we're running out of time, so I'm just going to close this with one sentence and would request a one-word answer to this. Because I didn't even get to AI and cybersecurity and all of that, but what do you think in one word is the biggest threat to enforcing secure markets? The biggest threat to actually successful secure market?
The seal for FINRA.
In one word, if you can.
Carelessness.
Will.
Greed.
I think not understanding the industry, especially in digital assets. We're talking different languages.
That's amazing. Well, if you guys want to speak to our panelists, we'll all be around. Thank you so much. Have a great day.
Thank you very much, Nikita and the panelists.